And today we're going to be jumping into some actual scenarios around mortgages, real life scenarios that you guys helped some clients solve.
He essentially was able to pick up 3 properties all at once, a fourplex, a fourplex, and a triplex, refinancing them out individually. And at the end of it, our client should make $400,000 after the purchase of the property.
All in all, they walked away with close to about like $1 million in equity takeout on that project.
How she had this opportunity and she wanted to take advantage of it, but didn't have the cash to do it. And I explained to her how cross-collateralization works. We were able to use her other assets in her portfolio and use the equity that's already just trapped in those assets. Quite literally, her only cost to close was her lawyer fee to close the transaction, which she was super grateful for, allowed her to focus on what she's looking forward to do at the moment. And we're really looking forward to seeing how this one turns out.
What is up, YouTube? Matt McKeever here, and we're back with Josh and Ehren, and today we're going to be jumping into some actual scenarios around mortgages. So we've talked a lot in the past about, the rules, regulations, the concepts, the theories, but today we're going to jump into some real life scenarios that you guys helped some clients solve some problems that I'm going to guess aren't unique only to these clients. I bet a lot of our viewers likely will find themselves in these situations as well.
I agree. Yeah, we get, and maybe it's self-inflicted, but we get a lot of people who reach out for, creative financing solutions, and the creative options are there, but we do need, we need some help from the borrower. So you have to be able to bring us something. If you have no cash, no equity, no properties, no nothing, it's very tough for us to be able to put together some sort of creative solution. So we need a little bit of help from the borrower to be able to make it work, but if they can bring us some strength and they can bring us some property or some money, we have the ability to be able to kind of finagle some stuff and work with our private lenders and put together these creative options.
Yeah, and we talk about creative financing, but we don't really dive deep into what that looks like or how we go about doing that. And so we thought we would tell you a little bit about a few projects that we've done recently, set some expectations so you guys can understand what it takes to actually get deals like this done, and then you can understand, I guess, how somebody would be successful in using these type of private financing. Because some of the professionals that I talk to, accountants, other investors, why would you ever borrow private money? Well, if you have a situation, you need a solution, and that property maybe isn't financeable by a bank, but there's a ton of money to be made, private financing works. So, understanding how that works and how flexible we can be is what we wanted to kind of convey to you guys today in this video. Let's jump right in. So I'm going to talk about a creative flip that we just did. So this flip was in Sarnia. This client was picking up a completely gutted triplex. It's been sitting on the market for a decent amount of time. It's studs. So really difficult for any sort of conventional lender to be able to lend on. This client has past experience with doing flips or doing other projects, has a decent portfolio of other assets in the area, at decently low leverage, which was great. And we had a conversation with her up front, and she was talking about how she had this opportunity and she wanted to take advantage of it, but didn't have the cash to do it. And I explained to her how cross-collateralization works. So essentially what we were able to do is we were able to use her other assets in her portfolio and use the equity that's already just trapped in those assets, because she doesn't make a whole lot of money on paper, so it's very difficult for her to be able to refinance and pull that cash out. But I told her to use the tools in your toolbox. She didn't understand that those tools were available to her with this type of financing. So we're going to use her 2 properties that had a few $100,000 of equity in it, cross-collateralize it over the project we're looking to purchase, and we were able to fund 25% of the down payment. So the rate was 7.99%, which is a decent carrying cost for a private project. And we were able to source $200,000 of renovation costs for her to be able to actually go in and do the renovations and complete the project. Now, as I said before, it's difficult for her on paper to be able to scale anymore. So what we're going to do is, she now knows how much revenue needs to be generated on this property to be able to qualify for commercial financing. So if you have a triplex and let's say the ARV value is $500,000 and the debt service coverage ratio is 1.15, how how much revenue per unit do you need to generate to be able to qualify for that takeout financing? Banks like brand new buildings with brand new finishes and great rent and great tenants. So, understanding your takeout financing is going to allow you to be able to execute on your private financing, because we'll never put somebody into a private loan that doesn't have a concrete exit strategy.
Yeah.
So we were able to figure out how much revenue needs to be generated. By doing that, we were able to figure out the finishes, the type of tenants she wants in there, the layout, the plan, and they're using a local contractor in the area that specifically focuses on projects like this. So we were able to help her get her renovation budget, get her down payment, utilize the tools she had, and get in the project. She's currently working on it right now, so I'll give you guys an update when it's done, but she's really excited about what we were able to create. And the fees were built into the loan amount, so there's no cost to her up front. Quite literally, her only cost to close was her lawyer fee to close the transaction, which she was super grateful for, allowed her to focus on what she's looking forward to do at the moment. And we're really looking forward to seeing how this one turns out.
That's awesome.
Mm-hmm.
Yeah, I think one of the fair deals that I've done so far, it was in London. It was a very complicated parcel purchase where the borrowers had negotiated a great deal with a seller. The seller had plans to I think it was he wanted to demolish and kind of build one big medical office, but didn't plan out. He was kind of hemorrhaging money, so he sold the properties off at a pretty great price. In the parcel, they actually picked up 2 semi-detached fourplexes, a duplex, another duplex, and a triplex. And there was actually another duplex, but they were able to wholesale that one right away. Now, they wanted to keep each of the individual properties without merging the titles, and they were all on basically like a corner lot, and the lots all were touching. So if you understand property zoning and stuff, the lots are touching and you have the same owner, it all merges into one title. So they had to purchase each individual property in a different name. So they used a couple holding companies and then a personal name. They were going to gut each individual unit, rebuild the entire thing, go from there, rent it out, make sure that it was going to cash flow again in the end. So the complicated part with that is you can't take a building to like a AAA lender and say, I'm going to gut the entire thing. They're probably not going to be a huge fan of you getting that done. So needed to close relatively quickly as well. Their previous financing that they were looking at had kind of fallen through. So it came to me, we were able to go to one of our private lenders that we work with pretty often, and he can be pretty flexible for us. So all in all, we had, I think it was close to 8 properties on the commitment, because we had collateralized 3 additional properties, and we were able to keep the total loan to value at, I think it was like 80 or 81% cost. So kept some money in the pocket for the borrowers as well too. Did one giant blanket loan over each individual property. So we utilized, like I said, there was 3 additional properties that had minimal equity available, so we had to use a couple others. Got the loan done, got it done for a 6 months open term, so it was open to 1.5 months interest, so mitigated the amount of cost to exit out on the back end. The borrowers were able to get in there, got 98% of the units. I think there was a couple tenants that weren't leaving. Got it all done in 6 months. We then took that file to a credit union and were able to individually refinance each property because of that unique ownership structure, and get it done all in the holding companies as well too. So utilizing that private financing was able to keep their acquisition costs down, where maybe some lenders, if you're going to be telling them you're going to be gutting it, maybe they're at 70%, maybe they're 65%, maybe they're 75%, depends on the lender, but keeping that at 80%, allowing them to just put the 20% down, and allowing them to be able to gut each individual building, then having a strong takeout with that small commercial, to be able to refinance each one of those personally on the A side probably wasn't going to happen. The cash flow was super strong on all of them. On the small commercial side, we actually got 80% loan to value on 2 of the properties. We got like 78% loan to value on the one property, and then they were going to flip the one property afterwards, but we ended up getting about 75% loan to value. So all in all, they walked away with close to about I think like $1 million in equity takeout on that project, which is, a huge equity takeout, a huge profit to be able to be made. But there again, just a really strong situation for an independent private lender. This wasn't a MIC either. If you took something like this to a mortgage investment company, they're probably going to be 65% loan to value. So having a hard money guy who understands, has been around, can utilize, collateral properties, it was a complicated deal to get it done. Took a little bit to get done, but it was a huge success for the guys, and they walked away with a pretty decent chunk of change in the end. So,
yeah, I love creative finance.
Yeah, it was a pretty fun deal.
Yeah. All right. So there was a client that I just dealt with. Actually, he ended up finding himself in a really precarious situation. We find a lot of our clients actually were like just stumble upon these great deals, and when you find opportunity, taking advantage of that opportunity isn't always the easiest decision to make, or financing that opportunity is extremely difficult. So, he essentially was able to pick up 3 properties all at once: a fourplex, and a triplex. He was able to get appraisals on these properties. Now, these properties fully appraised for about $1.25 million. Now, his purchase price in these properties was around $1 million. So, his ability to be able to get like a $250,000 lift on purchase, allows him to be able to, already have that lift when it comes to looking at a refi. So he came to me, he's like, look, I don't make nearly enough money on paper to be able to qualify for this conventionally. Some of the units are in rough shape. How do we go about doing this? So, everybody comes and says I need 100% financing. Now, is it as easy as waving a magic wand and saying, yeah, someone's going to do this? No, it's not. So finding a solution is the most important thing in this specific situation. So the condition of the properties, weren't necessarily, AAA. Some of the units needed to be turned over. They need a little bit of TLC, so, paint, new kitchen, stuff like that. So the client had enough money to do some of the renovations on all these properties, but not enough money to put, say, 20% down on $1 million, plus the renovations on the properties, plus the carrying cost to close. So we were able to structure a really interesting deal in which it was a first and a second. That first and a second combined had a total cost of around 9.5% on the money, but we were able to get almost 100% loan to value on the actual purchase, structuring it that way. So the first position lender was very okay with the loan to value being collateralized over the 3 properties, and then what we were able to do is to mitigate the risk of the second position lender, we ended up getting another piece of collateral. It was a family member of his, or one of his properties that he had that had some equity in it. We added that to the deal to show a few things. One, additional value of the properties, but it also showed that he's in it and he believes in himself. At the end of the day, when you're dealing with private lenders who have their own money at stake, they need to understand that you have something to lose. And when you're looking at 100% financing on a deal, you need to prove to them why they should be able, even to be able to entertain something at this value. So, giving up a property that means a lot to that person allows the lender to be comfortable with the deal, so that he understands that that person is going to do absolutely everything it takes to be able to finish the project and bring it to completion. So that deal, essentially what we're doing is we're going to be reverse engineering it backwards, as I said, understanding how much revenue needs to be generated on these multifamilies, and once that revenue is generated and the renovations are completed, refinancing them out individually, and at the end of it, our client should make $400,000 after the purchase of the property. Now, important to understand, cash required to do this deal. You're going to need some funds for the down payment. You're going to need a piece of collateral to allow us to be able to feel comfortable with the deal, carrying costs, renovation costs. So you can't have no money in this deal, guys. This is a very unique situation. The properties are in a good location. The borrower does have the ability to do it. One of our past clients, we've done a few flips with them before. I trust him personally. If you're able to show me that you can have faith in actually completing projects, I can go to my lenders and be like, this guy does it. He does what he says he's going to do. And at the end of the day, my relationship with that lender, that person trusts me as well. So if I trust you and that lender trusts me, and I have faith that you're able to do the job, that goes a long way with you being able to complete projects of this scale and this complexity. So, as you always say, have your power team, but if if your power team trusts in you, that goes a long way. So trying to structure deals at 100% financing isn't easy to do, guys. I'm not sitting here being like, wave a magic wand, it's going to happen every time. But when you have people who you trust in, the people who trust in you, if you have capital, if you have a collateral property, there are extremely flexible ways to be able to take advantage of solutions like that. So problems are profits. You find problem properties. There are ways to make money in doing it, but being able to structure that deal in a certain way and working with people who understand how to do it effectively and quickly is what's going to be the difference.
Awesome. Yeah, I love the case study, guys. Really appreciate it. If you guys at home would like to see more case studies, if you'd love for us to dive deeper into case studies, let us know in the comments section. But I think as Josh and Ehren were highlighting throughout this entire video, it really comes down to having someone on your power team that's been there, done that, got the t-shirt, right? If they're regularly dealing with creative investors, they're going to be more familiar with the creative solutions that creative investors are using on a regular basis. So this is why it's just so critical that you're making sure you've got the right people on your bus, right? So if you guys are interested in reaching out to Josh or Ehren, we'll throw a link in the video description down below to all their contact information. Really encourage you guys, reach out before you're panicking, right? Before the panic, ideally, because again, the more time you give people, right, the more opportunities there are for them to tap into their network and find different solutions for you. And again, it's important you come and just fully disclose what's going on, what you're trying to accomplish, and what sort of assets or tools you've got available.
Yeah, I think to jump in there real quick, you made a really key point is before panicking, our ability to get creative is limited by how much time do we have to close. If you have an appraisal, a property that you're looking to get done and you have a higher appraised value, you want to try to get something done on that higher appraised value, well, if we only have 5 days to close it, I don't have the opportunity to put something together for you. But if you give me a few weeks to be able to put that together, the more creative solutions come with a little more time to put it together. When you're rushing around last second and you have to get everything signed into the lawyers within 2 days, our ability to get creative is really diminished. So the more time you give us, the more likely we are to put together a super creative deal and be able to work that through with the client.
Awesome.